Good afternoon. My name is Ben Lafort. I'm OFA's economist within our policy research department, and very pleased to welcome you to this lunchtime webinar on agricultural operating finance programs available to farmers in Ontario. Our guest speaker today is Scott Clark. Scott is VP of Marketing and Communications at Agricultural Credit Corporation, ACC. Leading strategic marketing and business development for the company. He connects with producers and farm organizations to discuss credit solutions available from ACC. Scott has more than 25 years marketing experience in many different industries such as agriculture, transportation, energy, banking, and biotech. He lives in Burlington, Ontario with his wife and daughters. So without any further ado, I will throw it over to you, Scott, to lead us through today's presentation. Thanks so much for joining us today.
Okay, thanks very much, Ben, and thank you to the Ontario Federation of Agriculture for inviting me to speak, for having ACC today. We think it's a great opportunity to continue a good partnership we have ACC and OFA. Obviously, we rent a couple of offices in the OFA building for some of our staff, and certainly we do a lot of different things together in terms of promotions and also, working with government and that kind of thing. So, thank you again for the invitation. Today, I'm going to talk about a couple of different programs that we offer. Let me think of the agenda here. But I'm going to start off a little bit about who ACC is, who we are, and kind of why we were created and what we do. The next two elements of the presentation are going to be the two main programs that we offer. The first one is a federal government program, the Advanced Payments Program, or APP. And the second one is the Commodity Loan Program, which is a provincial program. Both offer significant interest savings on operating loans for farmers. And so I'm going to take you through some details of each of those programs so you can get a sense of whether it is, how it fits in with your particular farm business and where you can benefit from one of those programs. From there, I will talk a bit about insurance and how that factors in, and then I'll talk about savings expectations. What can you expect to save on interest in a dollar value, depending on kind of how you structure your loan and which program you're looking at. I'll kind of end the presentation with some additional information about ACC, about how to apply, and really just how easy the process is to work with ACC in getting an operational loan from us for your farm. So who is ACC? Well, we are a nonprofit. We're not we're not a government entity per se, and we're not a bank. We are an independent nonprofit corporation. We were formed in the early 90s by the wheat producers, the soybean producers, and the corn producers here in Ontario. And we were created for the express purpose of delivering um, finance programs for farmers. That is our raison d'etre. That's why we exist. And really, our programs want to provide cash programs at good interest rates, preferential interest rates to farmers, make sure farmers have access to credit, and make sure that basically you can spread the marketing based on the time of year when demand and prices when it makes sense for you. And I'll talk a bit about the timing of our programs on that. So we are a farm-focused organization created by farmers, and on our board of directors is made up more than half are farmers themselves from various commodities, dairy, fruit, that kind of thing. So we definitely have a farm focus. We were created, as I said, by three organizations back in the early days, in the early 90s. We continue to have member organizations who we work with quite significantly. Some, as I mentioned, have folks on our board, and most of them are in Ontario, Ontario-based farm organizations. You can see some of the banners here, the OFA being one, Canadian Federation of Ag as well. Now we've also got a few British Columbia organizations as part of our membership. And again, we work with each group to try and make sure we get the word out about our programs so farmers can take advantage. So the Advanced Payments Program is our first program I'm going to talk about, and it's our most popular. It is available across Canada. ACC, we are the administrator of the program in Ontario, British Columbia, and for certain commodities in Quebec as well. We do a couple things in the prairies, but we are the sole administrator in Ontario. So many of you probably have either heard of us, may work with us already, or have worked with us in the past. And we are a different company than we were a long time ago in terms of how we are able to lend. And so I'll start here with the Advanced Payments Program. The program is basically overseen by the Agriculture and Agri-Foods Canada, or that ministry within the federal government. Farmers can get up to $1 million in advance for their operating as an operating loan. Uh, the first $100,000 of that is interest free. Now, most farmers don't take $1 million; they take something less based on the size of their operation. So $100,000 is interest free, and if you do borrow more than that 100,000, the balance is at a prime rate. Right now, it's 4.45%, and again, that's probably a rate that is better than you're going to get at your bank. So when you look at it in aggregate between the interest-free portion and the low interest rate on the balance, you're going to be saving quite a bit of money in interest cost. The way it works basically is this. You would apply, usually you would apply to us for an advance on April 1st. That money could be used to get your crops in the ground or to work within your livestock operation. Basically, you would put the crops in the ground, you would raise them, and then you would harvest them in the fall. Once you've sold those crops, you have 30 days to pay us back. So there's two elements to this program that can benefit farmers. One is the interest savings, as I've talked about. That's the obvious one. The other one, though, is also timing, where you can get access to cash when you need it for inputs for everything from seeds to labor to fertilizer and such. And then you don't necessarily have to pay us back until after you've sold and you have cash in hand. Now, the payout that we do when you apply and you tell us kind of what your acreage looks like, we're going to give you about 50% of the expected market value. Those prices are set by Ag Canada, but basically you get 50% give or take about versus what you're probably going to sell them for. So that gives you a good chunk of funds in order to get your operation in the ground, and then you can pay us back once you've sold. Um, so this program, basically, in Ontario, if you grow it, we probably fund it. The only, I guess, exception is supply managed commodities like dairy and poultry. But, again, grains and oil seeds, we fund horticultural crops, cattle, pigs, sheep, goats, greenhouse vegetables, cut flowers, potted plants, everything you see there, even maple syrup and ginseng. If you grow it, we probably fund it. And so obviously this is a pretty comprehensive program. Sometimes farmers will have multiple things they want to fund. They might grow soy, corn, and beans, let's say. And so they may borrow against um, each of those commodities within the same program year. Really, the only rule is they can't have any more borrowed than $1 million at a time. And again, our average loan size is a lot lower than that. Generally, it's around 200,000 depending on the year. So again, you're not forced to take more than you need, and basically, our customer service reps can work with you to figure out what you qualify for and how to structure your loan. Now,
So
if I just
I feel like there might be a good opportunity for one of the questions that were in the
sure,
chat right now.
yep,
Is cannabis
no,
eligible? Okay.
no, that's one that is not eligible, and we get that question quite a bit. It's just, because it's treated differently by the government. Like the other thing that we get a lot of questions on are fisheries. Again, the Ministry of Fisheries has their own programs to help farmers. So things like fisheries and cannabis are separate, and so they don't qualify. Um, and again, either does supply managed commodities. And again, there's debate around that, whether that's fair or not. But right now, that's how the program works. But pretty much anything else, if you grow it, we can fund it. Now, I wanted to come back to this slide too. We talk about $100,000 interest free. Recently, at the discretion of the Ministry of Agriculture, federally, they can increase that. The last 2 years, they increased that to 250,000 interest free. And the year before that, 2023, they had it at 350. So the act itself, the piece of legislation that governs the APP says that we have to offer 100,000 interest free, but it can often be increased at the discretion of the minister. Usually that's announced sometime in March. Um, and this is one thing I know that the OFA and the CFA have worked with us to try and convince the government, hey, listen, 100,000 isn't quite enough. We need to make it 250 or 350 or whatever that threshold is. The more the better. And we need to leave it because it helps farmers and banks and administrators like ACC better plan for their program year, for their crop year, for their production in general. So that is something I think we are being listened to, and it is something that may come to pass. But right now, I have to market it to you as 100,000 interest free. If you see me around in one of the trade shows or a webinar 2 months from now, I might be talking about 250 or 350, depending on what the government decides they'll increase it to if they do. So I know a lot of you come up to me when I'm at various producer meetings and you say, Scott, why did you guys knock it down to 100 again? It's not. It's not us. It's based on how the program is run at the federal level. And we feel strongly that they will increase it this year, but again, we can't plan on that or lend under that assumption until it's mandated by the government. But again, lots of products are available for the advanced payments program, and we are growing quite a bit. This product or this program, I think, we did, I don't know, between 1,000 and 1,500 loans for many, many years. And, as we came out of COVID and input prices went up, inflation became a factor, interest rates were higher. A lot of farmers saw that, what, I can do a better interest rate on my operating lending or my operating borrowing than with my bank right now. And so, they started to look for different opportunities, and the APP is a good one to save money on your operating borrowing. If you look at this is actually a couple years old, but I think last year's was very similar. If you look at our loan account, this is based on number of loans. The three big ones are, they're grains and oil seeds. Not surprisingly, based on what organizations founded us back in the early 90s. A good chunk of our loan account is corn, is loans for corn farmers, a good chunk for soy, a good chunk for wheat. Fourth is cattle. We do a lot of beef cattle and veal. But you can see here, and the reason I showed this is we do work with pretty much any commodity. Some of them we have a long ways to grow. We could do a lot more on vegetables. We could do a lot more on pork and things like that. And so, again, our marketing efforts are geared towards that. But again, this program is geared to pretty much anything with the exception of the things we've talked about, the supply managed cannabis, that kind of thing. But again, there's one of the ways that we grow is to work with some of the organizations that you saw up front, the corn growers, the apple growers, the grape growers, and work through these organizations to make sure you guys are aware of this program. Of course, one of our best and biggest in terms of volume to work with is the OFA, and why we appreciate being part of this today. The second program that we offer is called the Commodity Loan Program. It doesn't have the sticker shock of an APP. It doesn't have interest-free money, but it still offers some really good advantages in your operating borrowing based on your operation. So it's not up to $1 million, but is up to $750,000 available. the prime rate that we're going with right now is, again, it's 4.45%. So it is a lower rate than you would get at your bank, likely. And there's a couple reasons why someone might um, prefer to take the commodity loan program over the APP. And that is simply a couple of elements of flexibility. The APP pays out on April 1st and beyond within the program year. Commodity loan program, we can pay out based on your application pretty much any time of the year. The other thing that we have to keep in mind is, whereas the advanced payments program pays out 50% of market rate, commodity loan program gives you a little more upfront cash at 75% of market value. So there are farmers who say, you know what, based on my operation and my cash flow needs, I'm actually doing really well going with a lower interest rate and getting more cash up front, or getting the cash at a different time of year. Whereas there's a few more rules and restrictions on the APP. Really, it comes down to what works for your farm. I mean, you as a farmer, as a business person, know how your cash flows work through the year, when you need cash, when the inflows and outflows work. So really, it's up to you to determine what makes most sense for you. There are farmers that take both. They'll take, some of them, they'll borrow on some of their commodities, like maybe cattle, right? They might borrow against that on the APP, and then they'll borrow against some of their crops on the commodity loan program. It really depends on how you want to structure your loans. And again, you can call one of our CSRs and tell them a bit about your business, and they can help you go through some of the permutations of what might make the most sense. CLP is a smaller program as well, because it's really just focused on these crops that you see here. It doesn't entail all fruits. It doesn't entail livestock, but it does have a fairly wide breadth of different crops that qualify. So again, it is a popular program with Ontario farmers. It is provincial only, so it isn't as large as our APP offering, which is in other provinces as well. But it is a really good program, depending on how you structure your business, and it makes sense for some farmers. Other farmers that I see using the CLP are junior farmers, where maybe they're just starting out and they just need more cash up front. And, depending what they can or can't get at the bank, this is a good option for them as well. So again, those are our two main programs that we offer right now, the APP and the CLP. Really, as far as insurance, it's fairly simple. To participate, you have to have either production insurance or agri-stability through Agricor. Generally, if there's a general security agreement registered with another lender, then we will get the priority agreement, and that paperwork is done by us, ACC, through the bank. And that's not something that you have to run around and do. We can do that. That's part of what we do for the fee. So, and again, the fee I'll talk about in a minute is $1,000 per program year. But again, that covers off a number of things, costs that we have to bear. So, again, it's fairly simple. Those that worked with us 10, 15 years ago might remember it being a lot of paperwork, and it was. And that just isn't the case anymore, and I'll get to that in a minute. This is a slide I like to show, just to show you real savings. And in banking, and of course, even as business people, we often tend to think of, when we think about borrowing, whether it's operating loans or even a mortgage from the bank, we tend to think in percentages or basis points. This is an example of last year, when there was $250,000 interest free, remainder at 4.45%. This shows basically the amount borrowed on the left-hand side, and then two different bank rates that were quite common, probably still are, prime plus one, prime plus two. So we're looking at 5.45% or 6.45%. So if you took out $250,000 with us, which was interest free, and you looked at it against, borrowing it from your bank at 5.45%, we're saving you over $13,000. If you had a higher rate, 6.45, we're saving you $16,000. Now, this doesn't incorporate our fee, which is $1,000. So take that $1,000 off each of these figures. You can see it's still a substantial savings based on your borrowing. And this is just your interest costs for your operating lending. So if you borrow 250 from us and you're let's say you're a bean farmer. So you're borrowing in April, you're getting your beans in the ground, you harvest them in the fall, you sell them and get paid by, let's say, November, December. You're borrowing that $250,000 for less than 12 months. And we're saving you that much interest in that time frame. So it is very much a good value proposition to look at this program to save on this interest. Again, a lot of farmers we talk to at trade shows and at producer meetings say, input prices are really high. I don't find a lot of places where I can save money. This is one of them. And so this is really where I just wanted to kind of show exactly the kind of numbers. Here we're talking about 250 interest free, which, right now would be less at 100,000, but the last few years they've put it up. So this is a scenario we saw last year. So it is a significant amount of savings when you look at it that way. Okay, ACC has evolved. I wanted to put this in here because I know being out talking to producers, we've heard horror stories about dealing with ACC going back 20 years. And I think that, our current CEO, Jay Atkins, when he came on board around, I think, 2011, 2012, one of the things that he wanted to do and the board wanted to do was to make it really a lot easier to work with us. So if you look at this, let's tick some boxes here. You can see that back then the number of application forms was over 50, which is a lot. Now we have three. We have one for the APP, one for the CLP, and one for another program that's being sunset soon. Number of pages in the application was a lot. Again, going back and forth by mail, 50 pages is too much. Now the application is about 3 pages. And right now we can do it over the phone. If you're a first-time applicant, you can give us a call and give us 20 to 25 minutes and we'll have your application pretty much done. And we'll have you funded by April 1st. Back then the funding timeline was 2 months. Now it can be a lot sooner. Again, for the APP, we don't start funding on this year's program until April 1st. But once that's done, basically you can get funded fairly quickly. The other thing that we've done, and again, you can ask some of our folks how much work and how much expense it has taken for us to get there, but we've invested in a bespoke software called AgriLoan. And what that allows us to do is have a really strong, robust platform by which we can fill out applications and get them approved quickly for farmers. And so again, that's where instead of having a back and forth process with multiple emails or visits to your bank, we can do it very quickly over the phone and basically get you approved fairly fast. Our customer service folks are really good. We've invested a lot in their training. We do a lot of training year round. And they've worked with all different types of farmers, irrespective of commodity, to structure loans in both the APP and the CLP. And it's a really good, it is a really, good process to go through, relatively painless. Nothing's perfect, but it is a really quick process. If you're coming back to us as someone who's worked with us before, then we can get you kind of, re-upped in about 10 minutes, less than 15. So again, if you're scared of working with us based on past experience going back a number of years, give us a try. A lot has changed. And we get a lot of good feedback from farmers saying, yeah, you know what, that was an easy application and I got my money in good time. So the fine print, I know there'll be a lot of questions about, okay, Scott, but interest-free money, there's got to be some catches here. Well, there really isn't. The $1,000 is payable on the last payment. Really, that's the only fee. There's no upfront costs or hidden costs beyond that. Obviously, if you borrow from us, you have to pay us back. If you borrow beyond the interest free, you may have interest-bearing money that you're paying us back. But really, it's fairly easy. It's designed that way. It is a government program meant to help farmers get access to the cash flow they need when they need it to get crops in the ground and to be able to pay back after they've been paid. Up front, we just need a few pieces of information: proof of Canadian citizenship, a little bit about your information, perhaps articles of incorporation, that kind of thing, and proof of Canadian, excuse me, we might need previous year's financials depending on your business. And of course, you need to have PI or agri-stability from Agricor. Other than that, it's fairly straightforward. And again, the programs are designed both in terms of what the government does and how we try and administer them to make it as easy as possible. And that's really what we have in mind when we're doing this. The other question I get a lot from when I'm out, out talking to farmers or on webinars like this as well, am I going to upset my banker? Well, no. The answer, largely no, you won't by and large. We do kind of a new client survey when someone fills out a new application. We have a piece there that they need to fill out saying, "How'd you hear about us?" It's not a perfect system, but it gives us a good directional understanding of where our customers are coming from. We do marketing. We do have a small marketing group. We have been around for 30 plus years. So how are we, where's our referrals coming from? Well, the top referral source is word of mouth, basically farmers talking to other farmers. And I know not everyone wants to talk about their finances with other farmers, you know, competitors or otherwise, but basically farmers talking about each other saying, you know what, there's a good program out there. ACC is the company, give them a call. So that's our biggest referral source is the market itself. And we appreciate that. Second is financial institutions. So, we work with all the large financial institutions in Canada, a number of credit unions, as well as FCC, and they actually refer a lot of business to us. And the reason is simple. Banks make money on larger ticket items, whether they're mortgages, whether they're, investments, if you're looking at, wealth management, that kind of thing. They don't necessarily make a lot of money off, short, lines of credit, short-term loans, cash flow loans like this. So saying to their customer, listen, we already have your other business. Um, you can get a better rate with ACC and a little more flexibility. Give them a call and see, because the account manager is going to be thinking about his or her client and, how are they going to be able to pay back their mortgage better? How am I going to serve them better? What's going to be in their best interest? Well, a low rate operating loan is in their best interest. So we do get a lot of referrals from banks, credit unions, FCC, and those types of organizations. So again, I just wanted to put this slide up here basically to say, as at the end of last year, this is really what it looks like on referral sources. So banks, we do webinars like this with banks. I've got one with one of the big five banks on Thursday morning, and it's a fairly regular thing. So again, don't be afraid to talk about it with your banker. Don't be afraid to give us a call, even if, knowing that you have other products that we don't offer with your bank, like mortgages and such. One of the things that, of course, we like to do is to get as many applications in early before that April 1st payout deadline for the new program year. And so this year we're going to try a contest to see if we can kind of front load more in January and February. So we launched this contest earlier this month, and it basically says if you can get your completed application done with us before February 28th, you'll be entered into a contest to win a $4,000 mower. And of course, we've got some flexibility on what you buy. You may not need a mower. You may need another piece of equipment. We can look at that $4,000 level. But point is, you can You can get an entry by completing your application. You can also get an entry by following us and doing some sharing and liking on Facebook, as you see, or sorry, on our social media platforms, as you can see below. And so definitely have a look at that, because the other thing that it does is it makes sure the earlier you apply, it makes sure you're in that first tranche of payouts we're looking at in that first week of April. So again, there's a lot of upside to getting in and getting your applications done early, simply because that means you get your money faster, and you get to take advantage of all the benefits we've talked about today on this. So again, we're open for applications on the 2026 program year. That 1877 number is a great one to apply. Again, even if you're unsure, if you want to give a shout to us, talk to one of our reps, say, hey, this is what I have on my farm. These are the crops I'm farming. This is the livestock I'm farming. How does it work? And what makes sense for me? What do I qualify for? They'll get you pointed in the right direction and help you get your application filled out quite easily. Want to give me a shout or shoot me an email? My contact information is there as well. Feel free. And again, I guess pretty good for time. So again, I'll thank the OFA for having me on this lunch and learn. I really do appreciate it. And I'm open for questions now if anyone's got some.
Fantastic. Thanks, Scott. That's a lot of great info. So I know one or two of the questions have been answered at the start. So I'll jump in from where I see where we did not answer. First one I'm seeing here is for APP for beef. How is the price determined?
Yeah, that price is determined based on, so all the pricing is based on Ag Canada works with its administrators to set the price based on what market rate is. So, basically they put that price, put 50% of that price as the payout. Now, generally it's pretty good. Sometimes the prices are a little off, and so we try and get them to adjust it. Sometimes, there's a change in price, which within the year, but generally it's set at the beginning of the program year by Ag Canada. And so that's how it works for pretty much any commodity. Now, if for beef farmers, it can work a little differently. The most common way we do a loan for beef cattle is what's called continuous flow. So let's say you borrow from us on April 1st, okay? You would borrow from us based on your beef operation on April 1st, and you would be able to use that money to, make sure you can rear your calves to, the weight at which you're going to sell them, and you pay us back 1 year from now. What that allows you to do, it allows you to get the money now and be able to, bring in cattle, raise them, and sell them without having to give us receipts every time you sell them. Basically, it lets you kind of borrow at the beginning of the year, pay us back at the end of the year, and run your business as you see fit. So there's a lot less paperwork. So that's how the continuous flow cattle works. Whereas, when you're looking at a crop, you would borrow April 1st, you would harvest and sell in the fall, and then 30 days after you get paid, you would pay us back with sales receipts. So it's a little different with crops versus livestock, but again, it gives you that runway of a year to use that money and then get it paid back after you've been paid.
Great, thanks. The next question is CLP looks like it supports maple syrup, but does it also include honey producers?
That's a good question off the top of my head. I don't think it does. I don't know if no, you know what? I'd have to get back to them on that. I have to look at the list because I'm not entirely sure about honey off the top of my head.
Okay,
On the CLP. I apologize for that.
no problem. Great. Okay, so no problem at all. We'll go to the next question. Can these loan funds be applied to building or expanding hydroponic systems for crops?
Well, so the spirit of the program is really it's for inputs. So that would be for fertilizer, labor, seeds, those types of things. Having said that, um, I guess, the only paperwork we ask for in terms of, showing us what you've done with the money is sales receipts. So really, if you're borrowing on, so many acres of corn, let's say, we just want to see, based on your receipts, that you sold that many acres of corn. So we're not trying to keep track of what the money is used for. Again, I think, well, it's definitely meant to be used for inputs, so not capital elements in terms of, outbuildings and things like that. At the same time, it is a source of cash flow that the farmer is going to use how he or she sees fit. So again, the spirit of it is inputs. Tell us, confirm that you've sold what you borrowed against at the end of the year, and we kind of leave it at that.
Great. Next question is, what if the prime rate changes during the year? Does our rate change?
Yeah, well, yes. So the interest free doesn't change, but like recently they've been either dropping or holding steady on the prime rate, and yes, it might go up. We don't know. That will change, what the interest bearing money is, that interest rate as well. So when I started 3 years ago, I think the prime rate was, I'm going to say, six something percent, I think, if I'm not mistaken. Now it's down into the fours. So it does change. So basically, what you'll see from us is every time there's an interest rate decision made by the Bank of Canada, you'll see on our social media, as well as we issue a press release saying, okay, this is what happened with the interest rate decision. This is how it affects the CLP and the APP in terms of that interest rate. So yes.
Great. Does the program work with young farmers starting up that only have 1 year history and only need, say, 15,000 for inputs?
Yeah, what, we've been working with the Junior Farmers of Ontario quite a bit. We definitely do smaller loans for junior farmers. Absolutely. That's something that we were able to do. And again, it's one of the reasons that some of them like the CLP better, because there's a little more payout at that 75%. I think the one thing that any farmer will have to do, if they're not borrowing the 100,000 interest free, or they're not, a big farm that's borrowing 1 million, does the $1,000, make sense? So if you're borrowing 10 grand, it might not really make sense to do the loan if you're paying $1,000 for that. Whereas, if you're borrowing 20 or 30, then you're probably still going to be saving money. It just depends on, what level you're borrowing at. But we do, like I said, our average loan size is, it depends on the year, but it's not, $1 million. It's much lower than that. And we do have loans that are 30, 40, $50,000 for smaller farms or young farmers that are starting out and don't have, the acreage that, for example, their parents might.
Okay. Next question is, how many loans does ACC issue annually in total dollar value?
I think 2024, I think we did 3,600 loans. I'm going to say between 800 and $900 million. So the advanced payments program is available throughout Canada. The largest administrator is the Canadian Canola Growers, based in Winnipeg, and they do over 2 billion. They do, I think, $2.5 billion in loans, because they do the APP for all those big farms out in the prairies, beef farms, wheat farms, canola farms, those big ranches that you see out west. The second largest administrator in Canada is us, ACC. We're probably gonna hit 1 billion this year, 2026. And really, after that, most of the administrators are smaller organizations in the other provinces. Now they're overseen by Agriculture and Agri-Food Canada, and they're really the ones that decide what administrators do kind of what geographies. So it's largely broken down by geography. But like I said, um, if if the canola growers don't offer certain commodities in the prairies, then we might get asked. Like, I think we do lettuce and carrots in Saskatchewan, right? Um, we do a number of commodities in Quebec, but not all of them. The Producteur de Grain does a lot in Quebec. So it just basically is laid out that way by Ag Canada. But in Ontario, we are the sole provider for the most part. I think the beef farmers have they have a program of their own that they offer as well, which again is beneficial to beef farmers. I think it's a little different than the APP, but pretty much as the APP goes and the CLP goes, we are the only ones in Ontario and for the APP BC as well.
Okay. Can loans be used in conjunction with other grants that a farmer might receive?
Well, this is a standalone program, so it's not like we would be combining it with anything else, right? Like at least not the way it's constituted right now. But I don't I you know I don't think that, as far as I know, I don't think it would preclude you from getting the APP if you had other grants. I think because generally that's probably going to be for something else unrelated on the farm. So no, from my understanding, no, it really wouldn't cross-pollinate there at all.
Next question is, does the program cover onions?
Yeah, it does. Yeah, absolutely. Yeah, I think there's a few different species that are on the list. Next time I do this, I'll print out my sheet. But yeah, onions are absolutely on there. Yeah.
Okay, great. Next question is, can grape growers use the APP for labor, for replants, or canopy management, including new posts, wire, etc., in existing vineyards? Not the capital side, they say.
Yeah, I mean, again, it's the word inputs is kind of loosely defined there. I mean, it depends. I mean, we have to say don't use it to build a barn. But again, it's about cash flow to get your inputs in the ground. So as a grape grower, what does that look? I mean, that might be, putting up posts. That might be, um, you know, covering your crops for frost, coming into a frost, time of frost. I mean, basically, uh, we want them to be able to have the cash flow they need when they need it in their growing season. And so, again, the only thing we really, um, you know, police isn't the right word, but I mean, the only thing that we want confirmation of is, hey, I said I'm going to, use the money for this acreage. We sold this acreage, and here's the sales receipts to prove it. That's really the extent of our oversight in that sense.
Okay, thanks, Scott. Two more questions here. Next one is there a minimum amount to borrow?
No, no, there really isn't. Again, I think, if you're going to borrow 5 grand, it probably doesn't make sense. But once you get up to, 15, 20,000, then you're probably going to be ahead depending what your bank rate is. So no, there's no minimum. There's just a maximum. And we have some big farms in Ontario that they borrow 1 million on the APP and they borrow 750,000 on the CLP. They use that cheaper cash flow to their full extent. And we have everything in between. We have, again, we have, I have farmers that come up to me, at, various events saying, I don't believe in debt. So, I've heard you have a good program, but I'm not going to apply. And that's fine. I mean, that's, again, I'm not going to tell farmers how to run their business. I think, that really the whole point of these programs is to help farmers. Farmers know their business, and so they can look at these, and figure out, you know, this is what makes sense for me. I don't need to borrow this much, but this much could really help. Or, I'm gonna, finance the planting of these crops, but not these crops. Again, this is a tool to be used. And we even say this to the bankers when we talk to them is, this may be, you know, a tool that can be used to help a certain farmer based on how they run their business. So no, there's really no minimums. There's just really maximums. That's it. And then rules around, repayments and such.
Okay, next one is what's the typical process if the repayment is late because sales are late or worst case never happen?
Yeah, so basically what the way it works for the APPs, you've got 18 months to pay us back. So if it doesn't happen within that year, that production year, then we can, you've got time to pay us back up to 18 months, at which point we do need to be paid back. Um, Basically, what'll happen is if if we do get into a default situation, we'll try and work with the producer as best we can, based on their situation. But again, that's why the program goes beyond the 12 months, is to be able to give them that 18 months, so that they can have that little extra cushion to get those things sold, even if it's not happening within that production year. And the CLP, you can go longer. That's actually, I think, 22 months or 23 months. So that is, really gives a lot more flexibility in terms of that runway to sell.
Yeah, excellent. And then one more question came in here. Which program would be best for perimeter fencing for sheep?
Well, we don't, it would have to be the APP because we don't, the CLP doesn't include livestock. So yeah.
Excellent. Okay, that is all the questions that have come in. Again, Scott, thank you so much. Great for the great presentation and taking some great questions and fantastic answers to it. We really appreciate your time here today. Thanks so much.
Okay. Thank you very much. Appreciate it.
Thank you. And thanks for everyone else for joining. Have a good day.